Joining us is a man who does understand a lot of this complex economic stuff, Jon Hilsenrath from Washington. And he's going to tell us a little bit about the IMF meetings, which, you know, if we think the US consumer can't figure out what's going on, leaders in Tokyo at the IMF meetings are at loggerheads, and we've got some big problems looming on the horizon from what it gathers to me. Welcome, John. Firstly, the chairman, Ben Bernanke, he came out, he gave a speech. He had to sort of, I mean, he's been under a lot of attack from outside of the US, from people suggesting that QE3, the bond buying program, actually harms other countries by raising their currencies. And he had a retort to that. Tell us a little bit about that.
Well, you know, so he's arguing that if countries like China and Brazil and India and other developing markets are upset about the effects of easy money U.S. policy, that they have a response that they could take, which is to allow their own currencies to appreciate. You know, so one of the arguments that the Chinese make is that the Fed is causing global inflation when it pumps money into the financial system, and that it's causing this rush of capital flows into their markets. Bernanke is saying you could shut off those capital flows and shut off inflation if you allow your currencies to appreciate. Of course, they don't want to do that because they don't want to hurt their own exports. So, you know, there isn't a currency war going on, but there's a currency war of words that's starting to build.
Right, and that speaks to the discord that seems to be, I don't know if it's rising, but certainly very prevalent. And that came out of these meetings. We've got
well, so you know, so I'll make the argument that the discord is actually a good thing. I mean, we're used to going to in normal times these IMF meetings happen and nobody agrees and nothing happens, and that's a sign that things are normal because countries are defending their national interests. You know, it's only in a crisis when the whole world is falling apart when these guys seem to agree to move together and move towards collective action. Maybe if they're squabbling, that's a sign that we're closer to normal than we are to crisis right now.
That's a very optimistic take on it, John. I mean, the IMF itself came out and said that we had alarmingly high risks of a global recession in its report going into this. You know, is that just you know, something of an ambit claim, an attempt to sort of stir people into action?
Well, I think there are a lot of problems in the global economy right now, but it's much different than it was in 2008. In 2008. There were common problems. There was a global financial meltdown, basically, and investors were fleeing risk everywhere, so everyone had an interest in acting together. Right now, what we have is countries with individual discrete problems. You know, in the EU and in Europe, the question is, what are they going to do about Greece? There's some big decisions once again looming over how to keep it in monetary union. What is Spain going to do about requesting a bailout? In Asia, there's a power handover in China. In the U.S., of course, we have the fiscal cliff. These are all problems that only domestic policymakers can handle in their own countries, and they have to do on their own. And that's why we see people kind of sparring with each other at the IMF, because everyone's pointing their finger at the other guy and saying, well, if you handle your problem, everything would be better.
Right, but I mean, the reason why they're pointing their finger at them, is it not, John, that they are concerned that those problems may spill over to their own shores. And I mean, the US has a risk, does it not, from a breakdown in the Eurozone. If Greece were to leave, for example, and you had financial chaos, let's call it, clearly the US would not be immune.
Yeah. You know, we're all interlinked. I mean, there's no question of that. The crisis of 2008 proved that better than anything else. And in that respect, you know, we have an interest in Europe solving its problems, but only Europe can solve its problems. You know, I would say that the U.S. right now, in a global stage of troubled economies, is probably in the best shape when you compare it to what's going on, you know, particularly in Europe and Japan and, you know, perhaps even to China.
And I wonder whether, though, to some extent, the problems that exist elsewhere give politicians an excuse to blame others for their problems rather than confront them. I noticed that de Guindos, the Spanish finance minister today, came out and said that Spain wasn't really the problem, the US was the problem with its fiscal cliff concerns. You know, Spain, of course, is facing some serious issues right now.
Certainly everybody has an incentive to point their finger at somebody else, but, you know, I don't know if you would call it an excuse to do nothing on your own domestic shores. Our fiscal cliff is certainly something that a lot of people are worried about, but if you look at bond yields on U.S. 10-year Treasury bonds, it doesn't look like global investors are really all that worried that, you know, that the U.S. economy, that the dollar is about to melt down or anything like that.
Yeah.
It looks like the consensus is that the U.S. is going to somehow sort through its problems.
All right. Well, we'll see, John. Thanks very much for your time. I appreciate it.